If you want to maximize your profits and minimize your losses, then active trend trading is for you. Hi, this is Dennis, the active trend trader. Welcome to today's session of On the Radar. I do this live stream on Tuesday, Wednesday, Thursday, 1 p.m. Pacific time, just after the markets close. We have some interesting things to talk about today. In today's session, I'm going to provide basically a overview of the 3 indexes that I track. And then let's see what's next. Let me look at my notes. Oh, I'm going to provide you a technical projection of how far Tesla could fall between now and Christmas, if that's something you're interested in. And I do have a bonus stock for you to take a look at that's holding up well, even though the market is selling off and continuing to struggle. So with no further ado, let's jump into it. First index I want to take a look at is the S&P. And I use the spiders as the stand-in for the S&P. I just really, what is a 1? The moving average is 820, is starting to cross over. Earlier in the day, quite interesting, as price action actually worked their way back up towards these past highs from yesterday, the 8 and 20-day moving average actually uncrossed. However, now it looks like we are in the process of crossing. It also confirmed to us that in this zone up here, there is a zone of supply where sellers are willing to jump into the fray and sell. And where did they come from? They were the people who basically were buying as the S&P was making a new high. Now, some of the people who bought up here at the 421 level, they're sitting there going, oh, if we can only get back up to 421, I want to jump out. Some of them make the sacrifice and say, you know what, I'm going to take the loss. We pushed up as high, I think we're going to fall more from here. And they'll take out their stop loss, they'll basically stop out earlier than that. And so if you are joining us today, hey, welcome aboard. Hey, Mike, I see you there. Rick, nice to see you. And remember, this recording of this session will be posted to YouTube. And so if you're not a subscriber to us over our YouTube channel, Market Tech Talk, then all you got to do is subscribe, hit the bell, and you'll be notified when this recording is ready. Join us live, you'll get to see the whole thing. See the whole thing. So that's what we have going on with the S&P. Again, it ran into past support, which is now resistance at about the 412 to a little bit higher than 412, around that area. I will be looking for a potential to take a trade to the downside on this. We'll see what transpires tomorrow. The other thing to be aware of, what is the momentum telling us? The momentum is still pointing down on all of the 3 momentum indicators that I'm utilizing. One of the things that I like about the TSI, the True Strength Index, I can also use it because it puts in patterns of their own. As long as that trend line right there remains intact, we will be under pressure to the downside. So that's an additional clue that I want to be looking at to say, okay, which is the shape of my momentum? Is it still going down? Where's my price action in comparison to the moving averages? The 820, we're below it. We're down below the 34 now. And so the last, line in the sand is right there at the 50-day moving average. That 50-day moving average breaks, look out for a drop to about $400. And that's fine. We're expecting, some kind of a move like that, especially with the indexes now. It's probably going to be approaching being under, or not under pressure from IBD, but potentially in correction. One of the things I want to do whenever we have a correction like this, or the start of a correction, I want to know where is my 10% correction mark, and just run up grab your drawing tools, and I just basically go up here to the size. So give us an idea. Where is a 10% correction? Lower than that, there's the 9% right there. As you see, approach about 378 is when we'll actually hit 10%. Yep, 379. And I want to look over here to the left. Is that in an area where it found past support? Yes, it is. So that makes it an important area for a potential reversal. But also, it also gives me a good downside projection on how far things could fall if we get a full-blown correction in place on the S&P. Moving on over to the NASDAQ. NASDAQ still remains one of the weaker indexes, as you can see. Not even close to its moving averages again. We're not having any type of a rally attempt at this point. Now, it could snap in and we could get a rally attempt before the end of the week. We could bounce higher from here. However, the price pressure on the NASDAQ is to the downside. And so we have reached about a 100% symmetric move based on, we're taking that. You look for symmetry in the price action, and it gives you an idea of where things might turn around. So from this high here down to this low, and then a retracement back up into this rally attempt. Then you project down from that using the Fibonacci extensions, and that puts us down to about 100%, maybe a little bit further than 100%. We can take a real quick look at that, in fact, to see where are we with regarding the Fibonacci retracement. Oh, I go here to the Fibonacci extension line, grab that, and again, I'm going from the swings, high up here, down to where, up there, there, high, back down to the drawing tool, not your. There we go. Down to the low. Now, again, expecting a symmetric move. As you can see, the dark line there is the symmetric move. It is oscillating around that. It almost hit its another downside stretch target of the 1272. We'll see what transpires going into tomorrow. If we blow through the 1272, where we're going, the 1618 is the next target to the downside. The Qs, again, weaker than the S&P, about the Russell, as represented by the IWM. It's in a similar boat to the in a similar condition as the NASDAQ or the Qs. We are not getting a real strong rally attempt back up into the moving averages. However, it is looking pretty significant to, like we could drop a little bit more. If we fall out of, grace here, look for, down here at the 208 level. Now, all three of the indexes that we track are showing what's called a bullish harami, where today's body of a candle is inside yesterday's bottle of a candle, and all three of them are showing that bullish harami. That is a bullish reversal signal. However, take a look at what your momentum's doing. The momentum is still pointing in the downside direction. Take a look on, tomorrow will be the end of the week. Let's take a real quick look at what is happening with the weekly on IWM. As you can see, the PSI pointed down, the MACD pointed down. No indication that we're ready to start back up. However, pay attention to where that past level of support is. That's a place where supposedly buyers could step in and take us back up to the upside, at least on a relief rally or a what they call a potential dead cat bounce. Dead cat bounce. So that takes care of that. Now let's jump over and let's see what's going on. The one stock I wanted to share with you as a reflection of a stock that is holding up fairly well. We've traded this stock earlier in the year. CCS it is associated. Yeah, Century Communities. It's Century Homes. What it used to be. And what's Century doing? Century is, there we go. Century is pulling back down towards the uptrend line. However, where does it stop? It stopped right on top of the 34-day moving average. So that's strong. What else am I looking at here? Well, it did a nice pullback right down to approximately the breakout area. Whenever you're looking at gaps like this, the middle of the gap is an exceptionally strong, this is a gap up, exceptionally strong level of support where you can plan a bounce. If there was a gap down, significant gap down, the middle of that gap would be a strong level of resistance. So the other thing I always like to take a look at with this is I want to take a look at what's the Fibonacci's doing. And this is a really good idea is if you're watching just a few stocks, start learning how to use the Fibonacci's because it'll give you a darn good clue of where things might go. Get rid of and as you can see, the magic fib box, the 38 down to 618, right there, is where price action came and found a floor. Look to your left. What do you see? That floor is also inclusive of the breakout area. So what that does for us, it gives us a couple of clues that if we had a candlestick reversal pattern, which we do not have on this, and the TSI started to roll back up and the other momentum indicators started to roll back to the upside, that would be a potentially good place to trade it. I will put an alert down here at about the $69.50, $69.50 to $70 level. So if price action get back down to, or I could actually just take it off the 50% retracement, put in an alert there. If price actions get down to that level again, I'll go to my chart, look at what are the indicators telling me. Do I have a reversal signal? And then plan it from there. Because what may be shaping up right now, remember, TSI has rolled over, the 20-day moving has rolled over, so we may be in for a ping pong type of effect where it bounces up to the 8, fails to break through on a rally attempt, and then rolls back over and falls. But I still like this to the upside. It is in a level where we could consider, with the right trigger, a buy on it. So that takes care of CSI. So you guys, are you ready for Tesla? Are you ready for Tesla? Take a look at Tesla. Over here, weekly chart on Tesla. Where I haven't switched over to it yet. Tesla has been struggling of late. And as I was going through, and I've been watching this for quite some time, we technical guys like to see things start to shape up. I started watching this when it started doing this. I'm going, okay, that's the first 2/3 of a potential head and shoulders. Then over this past few weeks, we put in the right shoulder. Note, from a traditional technical side, the left shoulder did not go up as high as the right shoulder, and so that makes it a kind of a classical head and shoulder type pattern. I hope you see that. Now what? Okay. Well, now what oftentimes happen is you'll get price action going back up to the neckline. It has a classical neckline too. I mean, this is a clean neckline. But oftentimes price action after it breaks the neckline will go back and do a retest. But the big thing is where's the projected downside? Where is the projected downside? So under the, again, traditional or classic technical analysis, what we do is we just go to the midsection, the high point of the head, snap in a line there, and this is the way I do it. You can also just go in and figure it out yourself and say, do a price comparison. I just use my trend line, and it gives me a number to the down, an amount, and then I just react. And so if you were doing it the other way, I would take the high and then subtract whatever this low is here for that range. Then I would go over here to the price where it broke down below the neckline, add that, and then subtract this range from that, and that gives me my projected downside target. Now, are we going to, what the other thing I'm going to show you or reveal to you, well, how do you estimate how long it's going to take, if that's something you're interested in? So I go back and I just grab this line here. You see, we have a very clear break of the trend line. Pretty close. So with that in place, that gives me a downside trajectory of what? Gives me a downside trajectory of $207 for Tesla to the downside. Does that make sense? That's a long ways. I mean, we're up here at, that's 207, that's 360 some dollars. 60, about 363. That's a heck of a long drop. And we would want to participate potentially in that to the bearish side. Again, we have, everything is pointed down toward the upside. Now, the thing about it is, you got to remember, it's not going to go there in one day or in just a few days. When do we think it might go there? Well, that's where you go over and grab and there's a couple of ways of doing this, but I want to grab where the shoulder started. So that is over during this week here, which was approximately the week of 10. I draw another line from the start of the shoulder. I could probably go started here, go up to the day that the week that it broke down here. And that gives me 39 bars. Now, that equates, since it's the weekly chart, that equates to 39 weeks. 266 days. So 266 days, and that is trading days. Well, actually, it's 39 weeks. So 39 weeks. We are in which week of the year? We are in, let's see, March, April, so 12. So we're up at about 18 weeks so far. And if that's another 39 weeks, that gives the projection of, and I'll figure this out for you really, that would put us out in, because each year is 52 weeks. And so I would say 57 weeks from now is when we could anticipate the potential of this pattern fulfilling. So that puts us at 57 weeks. Actually puts us out to the end of January. So I undershot by a little bit. Can it fall faster than that? You betcha it can. Can it fall part of the way and then stop? Yes, it can do that also. But at least we've got an idea of how things might go with Tesla. And so do you find, just let me know, if you find that beneficial, please leave a comment in the section over on the YouTube channel or down here in the comments also on Instagram. There's one more piece I want to throw in here again that I want you to take a look at. Let's draw a line in there at the lows, or where we anticipate the lows, right? Basically, that in. Try to click it. There we go. Look. So that's my projected downside target. I also want to take a look at, well, what if I do a Fibonacci on this? Let's just take the Fibonacci from that represents the head, and see how far it trajects down. So I'll take the low there, let's start the head there, go back up to the top of the head, which is there, and I've got it projected. So whenever you're doing that and you need to project down, you measure it backwards. What do you mean by that? I want to measure from high back down to the low. When you have these things planned and fall apart. There we go. So as you see, here is for that move, there's the 127 extension. So that means if it fails here and falls, that is the first projected down. Is it close to this projection here, the 207? You betcha it is, 210, 207. So that tells me, and then I also look to my left, does that projection down correspond with anything of support, resistance over here on the left of the chart? Yes, it does. There's up, strong level of support. So that's another way I confirm and get an established targets to the downside. So that's what I have for you today. If you found that helpful, please leave a comment, again, over on YouTube. And if you're watching live, you want to make a comment and tell me what you think. Because the way I will now take this information and look to play it, I'm going to be taking a look out towards the January of next year. So that's, that long away. Look for a potential leap and perhaps take a speculative trade on Tesla about halfway down to buy some puts where I can afford them. And so, okay, well, that does it for the day. If you did find this helpful, again, there he is. And so have a great rest of your Thursday. We'll look forward to seeing you on Friday, tomorrow. Remember, 11 a.m. Pacific time for how to make money trading stocks. We basically churn up 3 great growth stocks that look like they're setting up for the following week from our 3 stock picking experts. So until then, Instagram, please follow, like, and share. And we'll talk to you later. Aloha, and thanks for joining us live.